for joining us. Nod your head, sir, if you agree with my analysis.
Um, I definitely agree, Nikunj, that
Your
we
head.
are slightly expensive than the past, but not very, very expensive. And see, when we have a big earnings revival, I think that is given, right? Any stocks we see that their P multiples get re-rated when the earnings cycle gets strong. So it's all, the entire Nifty or India's corporate earnings cycle, which is looking strong, and which is why, despite trading at higher than the long-term averages, we have outperformed. Like, let's now there's no debate that whether we outperformed or not, or whether India is in a sweet spot. We definitely have outperformed and we are in a sweet spot. But yes, globally there are all these challenges, and that is what is keeping us in a tight band. Neither letting us give up on the market nor letting us go the whole hog on the market and saying that okay, we are going to make new highs, and there's wealth to be created, a lot of it to be created. But yeah, the global backdrop does not give you that confidence to go all out. So yeah, that's the way it is.
Peter Lynch once said that more money is lost in waiting for the correction rather than when the actual correction occurs, and that's the feeling I'm getting when I speak to everybody. Global cues are bad for a decline, but yeah, decline to aa nahi raha hai.
Absolutely. And having tracked BFS, the banks and financial sector for 14 years, this was a sector which used to get hammered first. Like, whenever there is a global volatility, this sector used to get hammered. But look at us this time. Like, we have so many banks and NBFCs trying to make new highs in such a market. So we have to respect that fact that, despite whatever happens globally, despite the dollar depreciation, the rupee depreciation and the tightness in the money markets, we've done fairly well. And that is probably what, markets are pricing, that, India's earnings growth is going to be fine. And India has not taken any political stance which will endanger our, probably our economic recovery in the future. So yeah, that's the thing, you have to invest. It's just that, everybody has a little bit of, greed that, okay, I'll get the better price for this. But yeah, you have to remain 70, 80, 90% invested. You can play around with 10, 20% for corrections, but broadly, you have to be invested. So
Yeah,
you're right,
absolutely.
Nikunj.
And taking a leaf, since you have tracked banks and financials, what's going on with PSBs? And after the upside that they've had year to date, do they still look cheap to you to buy?
Uh, yeah, so we all know the story that played out in the last 9 years in PSU banks. That first there were asset quality problems which came up, and then the growth stopped. So any levers which are going to increase your profits, it stopped. Now we are seeing exactly the reverse of that. That from 2018 to 2021, we had a cycle where asset quality of the banks improved, and now we are seeing that growth is actually picking up in a really big way. So I'll just give you one data point that, though the system credit in the last 3 to 4 years has been in double digits, the corporate credit growth in India has just been 2%. The CAGR for last 3, 4 years has been just 2%. And, these PSU banks have been, the ones who have done public sector, the corporate lending or industrial lending, so to say. So I think these banks are now going to show you a lot of growth, and when growth exceeds 10%, that is when you start seeing the operating leverage kicker. So, the earnings will rise faster than your loan book. We will see that happen to the public sector banks after a period of decade. So visibly, the market is excited. I think this phase lasts for definitely some time, because, manufacturing as a theme in India is going to do well. And that is why, the PSU banks can really, really do well. It's just that we have to navigate these macro challenges, but that is an outside challenge, not an inside challenge for the public sector banks. So I think there is a lot of steam in this rally. It's just that it's waiting for the macros to give you some signs that there is not going to be a third world war or something like that, and then we'll see good rallies across the public sector.
Okay, Nykaa. It is at a fresh 52-week low, almost at the IPO price. IPO price. Now it made a stunning debut. It made Falguni Nair the richest Indian businesswoman, and it has collapsed. Digant, you track the space very closely. Now some would say that Nykaa is the best of the lot. Cash generation, profit conscious, but markets are painting everything with the same brush, whether it is Zomato or Paytm or Nykaa for that matter, now Policy Bazaar. What has changed here?
Yeah, so Nikunj, I think, see, the thing is that these stocks were expensive when they listed, when they doubled after listing, and even probably today because people are pricing in a lot of growth. So, see, point one is there is absolutely no denying that, Nykaa disrupted the beauty and fashion market through its, online, offline kind of a model. But, now I see that a lot of other players are continuously giving some or the other schemes, and like I was just speaking to my wife about Nykaa yesterday, Nikunj, incidentally, and she said that I have not shopped from Nykaa for 9 months because there are a lot of other platforms who are giving me better deals in all kinds of beauty products. So that's the truth in life, that Nykaa disrupted the offline guys, and now somebody else is trying to come and eat away some pie of Nykaa. So that is probably getting reflected in the stock price, that what can be built easily, it can also be disrupted easily. So Nykaa is definitely going to fight back. It's a great brand, but markets never like this phase when your dominance is being questioned by someone else. So I think we are exactly in that phase where the dominance is being questioned. So we had the Bata, which was the dominant player, Bata and Relaxos, and now we see that their dominance is also being challenged by a lot of newcomers. So markets typically don't like this phase, and Nykaa may be cheap now, but still 10 times price to sales, or 10 times the revenue multiple. So I think there is battle to be fought, and it's not an easy answer here, that if Nykaa is focusing on profitability, a lot of others aren't. So it's not a easy game right now. People who want to invest in Nykaa have to wait and watch. There is, and it has to be a very, very staggered buying if your strategy goes right.
1 year ago, everybody was talking growth.